world is changing, and world is changing really, really fast. And if we don't change with the world, we'll get left behind.
ट्रंप घायल है, इसीलिए घातक है.
The kind of returns that people saw immediately post-COVID, I think that is not a realistic, scenario anymore.
We will be having double-digit earning growth in FY 27 and 28.
People want good returns over a long period of time instead of high returns over a short period of time.
डॉन को समझना मुश्किल ही नहीं, नामुमकिन भी है.
Ladies and gentlemen, on behalf of Bajaj Capital, it is my pleasure to welcome you to Fintastic Talk's La Premiere. This evening has been designed deliberately, not as a presentation, not as a pitch, but as a conversation among people who have built, preserved, and grown capital across generations. You are here because wealth today is not about reacting to headlines. It is about reading cycles early and acting with clarity.
I would request all the speakers to join me on the stage. So starting with Nilesh Bhai, as fondly called by the industry, Mr. Nilesh Shah. Friends, obviously Nilesh Bhai is most well-known face across the social media, and I could see a lot of interest when I told that Nilesh Bhai is coming today. So thank you, Nilesh Bhai, for joining us. He's also part-time member on the PM Economic Advisory Board and a gold medalist in Chartered Accountancy. So thank you, and his style we all know, Nilesh Bhai. So we love hearing you. Thank you for joining us today. Then we have Mr. Ganesh Mohan, who's the MD of Bajaj Finserv AMC. So he's also known for his views and his strategic skills. 16 years he was part of Boston Consultancy Group. And for last 10 years, he was strategic head for Bajaj Finserv, and obviously under him, the company has done amazingly well. And he's now the founding MD of Bajaj Finserv AMC. So thank you for joining us, Ganesh ji. And Mr. Gopal Agarwal now, I would welcome him on the stage as well. He's a very, very senior experienced fund manager from HDFC Mutual Fund. And I know him for last 25 years. I love his views. And thank you for joining us, Gopal ji. And last but not the least, our own joint chairman and MD, Mr. Sanjeev Bajaj. So thank you, Sanjeev ji. Our friend Sanjeev ji has been at the front in doing all the innovations within the company. And he has been, working 16 hours a day and makes us also work the same way. So thank you, Sanjeev ji, for joining us.
Thank you, Uttam. And thank you for everyone who came here. From our bottom of our heart, thank you. And you are the persons who make Bajaj Capital. So we are very proud to be hosting this event. And we are even prouder to have you as a part of our family. I like to say, we have a culture. We talked about Bajaj Capital culture. So we are a company which is built on culture. And we always say good morning. That whenever we are together or we are with our clients, it always has to be good morning because we have to give our 100%. So whether it is morning, afternoon, evening or night, we have to give our best. And that's the culture of Bajaj Capital. There is a lot we have achieved, but this journey is just beginning. And there's a lot we have to create. And same is for everyone here. All of you who are in this room are high net worth, have created wealth, but money is never enough. And our aim today is to help you create your HNI playbook for 2026 and beyond. Because guys, we are not in a normal world. We are in a world which is seeing a huge revolution. And revolutions earlier, industrial revolution, when it came, took 200 years. When IT revolution came, it took 20 years. When internet revolution came, It took maybe 5 to 10 years for it to proliferate. Social media revolution took 3 years. And can you imagine the AI revolution from the time it became public is not more than a year old, almost 1.5 years old, and see how the world has changed. So world is changing, and world is changing really, really fast. And if you don't change with the world, we'll get left behind. You know, about a couple of weeks back, I was at my alma mater at Harvard Business School. So I spent the whole day meeting all the professors, all the people who are researching, doing what is happening next, what is the world going to change. And it was something, you know, always data throws things that you can't even imagine. You know, so they were telling me that their belief is IT industry is going to go down because they say the time of body shopping is over. A typical guy in the international market is used to working 2x of Indian in terms of hard work because he does everything himself. He washes his clothes, he irons his clothes, he works, he sends his mail. But what India used to set Indians apart is that for the cost of that one guy, we could hire 10 guys. But now what AI does with bots and everything, for every one guy who was already working at 2x, it can make him 20x. So how does India compete? Today, almost 80% of the coding has become automated. In future, almost 100% coding is going to be automated. So how do Indian IT industry live to that? Era is not going to be of body shop. It is going to be of the companies who are going to be able to adopt AI, create a niche in AI, help control AI. So their concept was that the companies which are going to win are the companies which are going to have the ability to leash the AI. And we had a long discussion, which companies will it be and why will it be and why will that happen. But it was an exciting concept. You know, I was thinking if I put my investments there, maybe I'll make more money. And they said, look, data centers are past. You know, companies are already valued. GPUs are past. Companies are already valued. But this is where the money is going to, because at the end of the day, we are going to get into implementation. Another exciting area where, you know, stock prices are likely to go up. They said financial services is going to have a huge boom. And it is because financial services and any other industry which is on service delivery, AI makes you 10x more better at delivering service. Uttam showed you our Wealth Max tool. Earlier, to do a portfolio review for you, it used to take between 1 week to 14 days. Today, the AI takes 5 to 10 minutes to make your portfolio review. It takes another half day for our wealth manager or our investment manager to review your review to make sure there is no mistakes. People say AI makes mistake, but yeah, human beings also used to make mistake. I joke with my EA, your mistakes are 20%. Today, I have a digital EA, and I unleashed it today, and a lot of my people would have got emails from my digital EA that I am Sanjeev's digital EA and sending out. So I was looking at it, she's just making 8% mistakes even today. So point is that, look, but you can't write it off. So financial services, they are really bullish on. They are saying in US and even in India, banks have started expanding branches. And they are planning branch expansion. I said, why? Because, you know, everything was going digital. They said, no, because in an area where there is going to be no difference between artificial and real. You see a girl, you can't say whether this girl is actually a girl or a real girl. You know, I think our saxophonist or our violinist was very good. But if her video was on the social media, we couldn't have told whether it was a real person or it was an AI-generated video. So they say the power of relationship is going to go up. Yes, AI is going to enhance productivity, but the people will want to have physical touch. They are saying the power of physical touch, power of being able to see. So they feel retail will do much better because people will want a physical touch. People will want to see reality. He's saying the earlier belief, I see this and I order this, is not going to happen. Now they are going to want to prove because they don't know whether ye real hai ya nakli hai. So I think we are at a very exciting time. But what does that mean? That means that if you have the right fund manager with you, your money is going to do better. Okay, so the time of just passively investing or just buying an index stock, I think is going to be different because right now, for the at least next few years, whenever a revolution is happening, more intelligent investing does well. So rather than taking too much time, so I will start with you, Nilesh Bhai, that what is your views? And world has been so much up and down. If you talk to a typical HNI, he'll say, "Yaar, money has not been giving me returns for the last 1.5 years. And what do I do?" So what would you tell them?
So, good evening, everyone. Thank you, Sanjeev Bhai, Uttam Bhai, for inviting me over here. In last 18 months, undoubtedly, equity markets have been flat at Nifty level and corrected at both small and mid-cap level. But the SIP in the same funds have delivered mid-single digit to high single digit return. Gold, silver, everyone knows, have delivered returns beyond expectation. And while our equity fund may not have delivered return, our multi-asset allocation fund has delivered way beyond expectation returns. So the message, Sanjeev Bhai, is very simple. Asset allocation is important. It's your portfolio which should outperform inflation. Even if you have to take hit on equity or any other fund for a while, that's fine. The overall portfolio should outperform inflation year after year. And last year was no exception. Portfolios have still outperformed inflation and generated real return.
Thank you. And just sticking on to you only, Aapka, what is your view on the, now with the tariffs, whatever has happened, will there be much more stability in the market? 2026 beyond, how do you see the markets behaving? What should be the playbook for people here? What should they be looking at?
So on the global side, two Bollywood dialogue sums up US tariff and President Trump. One, Trump Ghayal hai, Isiliye Ghatak hai. Second, डॉन को समझना मुश्किल ही नहीं, नामुमकिन भी है. So he'll keep our life interesting and also other countries' life interesting. His actions will have consequences. Hopefully it will be temporary. Our government has pushed reforms, and we believe next 2 years earnings growth should be above 15%. That should support our market on a fundamental basis. FPIs have been selling since 2024, but in the month of Feb, they have turned buyer. And our belief is that their selling intensity this year should come down. If you are expecting 30% return, this market is not for you. But if you are expecting returns which are real, above inflation, and between high single digit, low double digit, this market should be able to meet your expectations. All this is subject to one factor, impact of AI on Indian IT industry. One extreme, AI eats our IT industry by automating software programming. We lose on remittance, we lose on software exports. Rupee goes for a toss. There are job losses. There is impact on consumption, real estate, automobiles, personal loans. everything goes for a toss. The other extreme, Indian IT company leverages LLM to deliver cheaper, better, faster solution to customers. They focus on enterprise AI, leveraging corporate data, securing that, allowing restricted access, and helping companies take smart decisions. AI industry becomes as big as IT industry. There is more remittance, more exports of services, more jobs, and everything falls in right place. The truth is neither going to be black nor white. It will be somewhere in middle gray. And which is why we remain cautiously optimistic on the market. Moderate your return expectations and stay invested, but keep eyes and ears open, especially for the impact of AI on not only IT industry, but also Indian macros.
Very well said. Listening to Nilesh bhai is always good. कि dawn को समझना मुश्किल ही नहीं, impossible है. So now let's wear a separate hat. I'll come to you, Ganesh. You come in from a very consulting strategy background. So how are you implementing it in your fund, and how do you think that markets are going to behave? What should the investors here be doing?
So, just to pick up on the point that Nilesh bhai was also saying, ki, whenever there is something which is new, which is coming into the market, like AI, right? There have been many such instances in the past as well, right? And in consulting, when first Google came out, right, there was this big fear: will consulting die itself as an industry? Right? It has actually grown 1.5 times faster. Right? So I'm not saying all of them are perfect examples, but services industries tend to evolve quite a bit. Right? Now, there have always been issues around, the end of banks because technology companies are there, because Google or Facebook, etc., will enter in the entire space. But that's not necessarily always a bad thing, right? Competition also helps an industry get better, right? So coming back to us at Bajaj AMC as one of the newer AMCs in the market, for us also the question was about entering an industry where there are already stalwarts, people who have been there for 25, 30 years in the industry. You have to bring something that is, a little bit new, unique, maybe something that you're bringing from other markets as well as learnings, etc. So for us, what we tried to do was bring something which we were seeing being used quite a lot in global markets, particularly around behavioral finance, right? And what we found was not just for retail investors, but even institutional investors, right? Using behavioral finance and its tools could really help you with having much better processes in making investment decisions. So we tried to actually bake that into the investment process itself within the asset management, fund management decisions. And I think that has been quite a helpful task for us. Now that is at a philosophy level, right? But ultimately what matters to people is the products itself, right? So what we decided was for each product, we try to give a very unique strategy, right? So whether in the flexi cap, we bring something which is, a little bit more differentiated in terms of mega trends, or in the large and mid cap with a quality oriented strategy. We've tried to bring unique strategies for each individual product, right? So that's what we've tried to really do. And the third is Bajaj Finserv, generally people know for technology, right? So we've tried to also bring technology into the asset management industry with very simple day-to-day technologies, right? Things that every Indian knows how to use. Things like WhatsApp, right? QR codes. So we just try to popularize these so that it becomes easier for people to interact with us, for distributors to work with us, and for us to make transactions also much easier for investors, right? So that's really how we've been trying to sort of build our position in this marketplace. And I think for investors, I would say that as you think about sort of the longer term perspective, think about what are the things that will actually still be viable or will be important in the next 3 to 5 years as well, right? So when we talk about AI, right, certainly it is going to have an impact on the IT industry, right? And maybe, what we're seeing on the jobs front, etc., there will certainly be an impact of that. But what will be beneficiaries of the AI space, right? So data centers, clearly, but data centers run on power, right? Similarly, more and more people will need devices to access AI, right? So electronic manufacturing, components, those kind of sectors can also see significant benefit. And while certain sectors in the workforce may see some impact, but those tend to be much smaller, right? What about the other areas which people will need to spend on? So our view is not so much of a doom and gloom, but as we're seeing the effort that the government has put in terms of driving consumption, right? Making sure that fiscal policy, monetary policy are supportive of that. Inflation is actually reasonably benign. Oil prices, despite all of the geopolitical concerns, have been quite stable. Rainfall has been good. So consumption actually we see as quite a positive factor for the economy. Earnings we are also seeing as probably in the low double-digit kind of an environment in the next couple of years. So it's actually quite a healthy situation to right now be, all right? And with I would say as a moderate expectation, I think that's probably a good thing to have at this point of time. The kind of returns that people saw immediately post-COVID, I think that is not a realistic scenario anymore. But a more moderate, low teens kind of a situation is much more expected.
Very nice. And so moving on to you, Gopal Bhai, from a fund manager perspective, hardcore, how do you look at the market, and what are your key points that you like to share, that what should people be aware of, what should they be doing?
So, in the last 18 months, the India has actually underperformed very meaningfully to the emerging world and to the developed world. So now I just want to give you a perspective. At the peak of the valuation of Indian market, we were at 4.7% of the world total GDP in terms of market cap, and our contribution to the world GDP was 3.7%. Today, our market cap has come down to 3.4%, while our contribution is 4.4% to the world GDP. So you can now make a sense that Indian market has meaningfully corrected, and now valuation, especially in large cap, has become much more meaningful. And now earnings recession, which was there in India, right, for the FY25 and FY26, which we are undergoing, we saw 2% and almost 6% earning growth this year. We are reasonably confident that we will be having double-digit earning growth in FY27 and 28, thanks to the RBI proactive action, a very pristine asset quality on banking and financial services, and recovery into this global commodity, especially because of AI and the dollar index weakness, which we cannot play dollar weakness through dollar index, but we have to play through the alternative assets. So due to this, I really feel there will be good improvement in capex cycle in India. So combine this, I really look forward for meaningful, positive next few years for the market as compared to the preceding 18 months.
Superb, thank you. And my next question to you, Uttam, is that for a person who probably meets the maximum number of high net worth individual, what is going on in their mind? What are the questions that they ask? And we are seeing that a lot of people are moving towards AIFs, PMSs, very high risk. Investment has become an addiction. People are doing pre-IPO, working with wealth managers whose only aim is to make money today. So what exactly is the mindset of the high net worth individuals? What have you seen? What are they looking at? Because sometimes, we talk about asset allocation. I was with one of our high net worth individuals in Bangalore. So he says, Sanjeev, I have to give you a credit. Last 5 years, I've only made money with you. I said, okay, that's great. I said, आपका portfolio कितना है? कहते हैं 100 crores का. I said, आपने हमें कितना दिया? कहते हैं आपको खाली 10 crore दिया था because I gave you my boring part, which is mutual funds. And he's saying that rest exciting parts was 90% AIFs and PMSs. He's saying if I net off, some of them have given me good returns, some of them have given me zero or negative. He's saying there I've virtually made no money, but whereas your 10 crores today has given me a fantastic results thanks to the guy coming in pre-COVID. So what is there in mind of the high net worth individual, and how do we take them towards more disciplined investing? What is happening?
Right. So I was just talking to Nilesh Bhai on the sofa when we were sitting together. So he was asking, what are people saying? Are they panicking or something? So my reply was that I think we see a lot of maturity over the years. People have made good money. They believe in the Indian growth story. So there's no panic at all. We don't hear this question which we used to hear 10, 15 years back, कि market गिर गई, returns कम है. अभी कोई, there's no such panic. People understand the cycles of the market. They understand that markets have to go up in ups and downs, and returns will be made over a period of time. So people have stopped chasing high returns. People want good returns over a long period of time instead of high returns over a short period of time. So that's the biggest change we have seen in terms of expectations over a period of time. Then also obviously in the HNI category, people want to try new things as exotic products. But over a period, people have realized that something will come back to reversion, mean reversion will happen. So if something has given very high returns, there's always a chance that over next few months or years, it will give lower than expected returns. So ultimately, every asset category has a average mean over a period of time which you can invest. So for example, if silver has given a very high return in last few years, there will be a period when it will give underperform compared to other assets. So we have seen shift to unlisted space also, but we have ensured that through proper asset allocation, we give a little bit of global equities, little bit of private debt, little bit of PMS, AIFs and other things. But majority, the key core portfolio, core and satellite approach if we talk about, the core remains mutual funds and the traditional investments which have given very, very stable kind of returns over a 4 to 5 year period.
So this brings up a very interesting and a very basic question. Okay, because we generally, when we do these events, we start talking about very complicated things, and I'll come to that. I would like your views on AIFs, PMSs versus asset allocation of mutual funds. What is an average HNI portfolio looking like? What should be the role of debt into that portfolio? Today, people are confused. Should I have debt? The maximum number of questions I get asked is that beyond liquid fund, should I have debt in my portfolio? Is a debt a debt category? Is it or should it be a part of their portfolio? So, so these are questions which are there in people's mind, and we would love to know your views. That what is your view? What is a typical HNI portfolio looking like today because of the money that had been printed, and how should that portfolio look for in the future, according to you, for them to be able to optimize the returns?
So one, you should know why you are investing. पैसा बनाना है, that is not the objective. Your risk profile, your tenure, and your investment objective should be crystal clear. In absence of those anchor, it will be very difficult to create money on a sustainable basis. I have seen in COVID an HNI panicking and liquidating his equity position, converting what was a notional loss into real loss, and more importantly, losing the opportunity to make money at those valuations. On the other hand, we have seen retail investor taking risk and shifting asset allocation heavily in favor of equity. So please understand your risk profile. Please understand your investment objective. And based on that, define the portfolio. On the same portfolio, a mutual fund will outperform AIF and PMS because whenever mutual fund trades, they don't have to pay tax. In both PMS and AIF, every time they trade, they will pay tax. PMS is a tailor-made product meeting your requirement, many a times taking higher risk to generate higher return, either through concentration or going into small cap, micro cap, mini cap. AIF many a times are leverage product. They can generate higher return, but also carries high risk. Please don't discard mutual fund because आपका ड्राइवर भी उसमें इन्वेस्ट करता है. आप प्लेन में बैठते हैं, ड्राइवर इकोनॉमी क्लास में, आप बिजनेस क्लास में हैं. आज तक एक HNI ऐसा नहीं मिला जो बिजनेस क्लास से उतर गया सेइंग दैट मेरा ड्राइवर पीछे बैठा है. तो फिर म्यूचुअल फंड में ये तकलीफ क्यों? What we have seen in investors who are successful, they have followed a very, very disciplined asset allocation process. Their exposure has remained in local equity as well as global equity. They have allocated between debt, equity, real estate, commodity, and alternate. And most importantly, they have followed valuation rather than momentum. These are the characteristics of HNI who are successful.
Very well said, very well said. And Ganesh, would you like to add something here? What, according to you, should be the ideal HNI portfolio? And Nilesh bhai always is being very clear. I didn't say it. A lot of clients tell me, कि हाँ यार मेरा तो आज की डेट में सर्वेंट म्यूचुअल फंड में इन्वेस्ट करता है, तो मुझे इन्वेस्ट करने के लिए कह रहा है. ठीक है, so that, you know, whether we like it or not, mutual fund industry is doing well. And what we look at is that whereas the normal retail investor is investing in mutual fund, the super high net worth investors are investing in mutual fund. But the high net worth are getting pushed towards AIF, PMSs, and other exotic products. So what is your view on that? And what should be the ideal portfolio? And what is your view on debt? Now this again, a question comes to me. Okay, should I even have my money in a debt mutual fund? What does a debt mutual fund mean today? Other than, obviously everybody understands a liquid fund or a gilt fund. But we are talking about like a credit risk fund. There are a lot of questions here that how should that be a part of the portfolio and what is going to be the future of that?
Yeah, I think Nilesh bhai has covered a lot of the points very, very well. So I will talk a little bit more about, how do investors actually get the best value out of the investments that they've already been in, right? जैसे कि suppose mutual fund में आपने invest किया है, right? Are you getting the full benefit of that investment, right? In fact, Morningstar की एक study है which is very insightful, which talks about fund returns and the folio returns, right? Which is basically what is it that the investors in that fund have actually made over a period of 3, 5, 10 years, etc., across different fund types. And what they found was systematically 2.5 to 5% का return gap आता है between what the fund is delivering, what the manufacturer is giving, versus what the consumer is getting at the end of the day. And this is also true for HNIs, by the way. It is not only for retail investors, right? Now, this is what we call actually the behavioral gap. Right? And why does this happen? Right? This actually happens because of investors acting against their own interest. Right? Suppose today market corrected, let's say about 1%. Tomorrow, a big headline will come up in the news. 5 lakh crores of market cap eroded, value destroyed. Right? अभी investor के मन में क्या हो रहा है? Right? It leads to panic immediately. Right? And in today's day and age, it's very easy to act on that panic. Right? You can pick up your phone, you can trigger a redemption, you can stop your SIPs, whatever, right? But what have you done? Like Nilesh Bhai's friend, you actually triggered, you've locked in a lower NAV. 3 days later, the market goes up. Feel like I should come back in, right? But what have you done then? You've come in at a higher NAV. Now, doing this regularly, year after year, investors are actually suffering that 2.5 to 5% return gap, right? So actually being able to work on our own, sort of behavior, on making sure that we are actually able to understand that markets will be volatile. Being able to react to that, I think, is a very important part of how we as investors take the full benefit of the market. Now, this is where the role of debt also comes in. Right? Debt is actually a very, very important product. And a lot of people say that, in mutual funds, retail investors don't, participate in debt. But Indians actually do have significant debt allocations. Agar aap dekhenge on FDs, CASA, you look at PF, you look at NSS, post office savings, it is a tremendous amount of debt, right? Only somehow in the mutual fund industry, we have not been able to yet convince people that debt is also a good product for them. I think this is something which can actually act as a little bit of a ballast for your portfolio, provide some stability. It also provides you the opportunity to take advantage of some market corrections as and when they come. If you're fully invested, it becomes very difficult to change at that point of time, and your mindset is also very different. But suppose you have kept 15, 20% as maybe a fund which is available for such kind of situations. And for that, what I actually recommend to everybody is, in a cool state of mind, when the market is not doing weird things like it does these days, just sit down and maybe write down, suppose market goes up by 10%, what is it that you will do? Market goes down by 10%, what will you do? But please write it down. Because jis din market 10% niche hoga, your mindset will not be the same way as what it was when you wrote this down. Right? So actually the biggest enemy, sometimes what I find for investors' returns and their portfolios, tends to be the investor themselves. Because they tend to act against their own interest. So how we as advisors, as wealth managers can help them, I think that is really where you can create a huge impact for your clients.
I fully agree. In 2017, I started an experiment with some of my own friends. So I always used to get questioned, I can invest in any fund. I just invest and hold and it is going to remain the same. Or I buy a direct fund, or I buy a index-linked fund, or this thing, it's going to be returned. My belief then was that if you just take a call once a year, whether that, how do you want to structure your portfolio? You want to be heavy on large caps, or you want to be heavy on small caps or mid caps for the next 6 months or 1 year. It can actually make a lot of difference. In this 2017, we started an experiment, as we said, ke Bajaj Saab ka principally tha, put your money where your mouth is. So I said, okay, let's build 3 portfolios. I personally believe that if you take a call on 1 year, it makes a lot of difference. That next 1 year, we are going to be bullish on large caps. These are not very complicated calls. Next 1 year, we are going to be very bullish on small caps. We believe small caps are overvalued. We will be bullish on mid caps. So they were very basic calls being taken only once a year. We said once a year in March, we will take a call, what needs to be done in April. And let's see what happens. And believe me, friends, when we were taking this call, these mutual fund portfolios of mine and my friends, like we were about 20 of us who started doing it together, just taking a call once a year where you want to be adds 2-3% to your returns. Today, people question, I go to a direct fund or I go to an advisory fund. I am paying 50, 60, 80 basis point extra. Why should I pay that? And that question we get asked. I said, yes, that's a great question you have. Then you put your advisor, wealth manager, and ask him, bhai, तेरे को मैं 80 पैसे extra दे रहा हूँ, तो justify करके दिखा. Give me the service that I deserve. Give me the wow experience I deserve. Make me feel like a king. Other people may be sitting, redeeming, doing this thing. And second thing, question people ask me, why don't you enable for high net worth transactions online? Let me tell you, we get so many complaints that one day one person in 2020 was sitting markets were crashing, he stopped his SIPs. And this gentleman used to have 15 lakh rupees of SIP per month. When did he remember that he had stopped his SIPs? 4 years later. And he's telling me, Sanjeev, your people didn't remind me. Which is also true, because it's 15 lakhs is a lot of money. So I was telling my wealth manager, bhai, you lost 15 lakh rupees a month and you didn't bother to ask him after 6 months the markets are correcting. So I'm not saying, I'm not taking away any blame from my wealth manager. He said, no, I wanted to respect the client. You know, because people can justify anything. So, but point is that it is very, very important for you to work consultative with a good advisor so that they can add value. Gopal, let me ask you this question. AIF, PMS, boring portfolio, multi-cap, large, multi-cap, flexi-cap. A lot of people get confused. Okay? I have my own personal view. I love multi-caps because I think they automatically offer asset allocation. Okay? But people question multi-cap, flexi-cap, and now you have multi-assets. What is your view? What is the right way to build a portfolio?
So, all the funds have been designed to meet the investors' requirement. These are asset allocation product. So, multi-cap fund, in this fund, we have to keep minimum 25% into large, mid, and small at any given point of time. So, in multi-cap fund, investors should come not less than 10 years of horizon. And this is the fund primarily for young investor who is coming into equity market. They have long horizon to invest with. Because I tell you, because I did the NFO of multi-cap and I managed this fund for almost 3.5 years. So in this fund, what happened? At certain point of time, let's say in September 2024, when the small cap valuation became very rich, okay? So, but as a part, you have to always keep 25% into this fund, right? And you know that in last 12 months, a small cap has given you minus 5.6% return, mid cap has given you 6% return, and large cap has given you 10% return. So you go through some pain for short term. But if you look at 3-year picture, in 3 years, the small cap has given you the highest return of close to 54%. Okay, so what I mean to say, whenever you invest in the multi-cap fund, kindly invest for a longer horizon so that you can go through the cycle, but at the end of the day, your journey is good, your outcome is better. That is the most important thing, right? Second, I manage large and mid-cap fund. This fund I like the most for an aggressive equity investor to invest. This is a very ideal product for aggressive equity investor. In this fund, what happened, the 35% large and mid has to be there in any point of time. And my learning in the market is the mid-cap companies are much more long-lasting. And whenever, like in equity market, your operating profit crosses 200 crores, no, your longevity increases and you are in a J curve of growth. So the lot of wealth creation happens in this period from takeoff to the large cap. So that is why the mid cap index is the best performing index in last 20 years in Indian equity market. So I am a large votary of large and mid cap fund for aggressive equity investor, because you know that when valuations are high, you will have some correction, drawdown. So, but this is a very ideal product for long term. Now, flexi cap, this is the all-time plain vanilla long-term product for any investor because there is no restriction. Flexi means flexible. The fund manager can go into large cap, mid cap, small cap at any point of time. There is no restrictions on this. So the flexi cap fund should be your core dal roti, right? It should be the core of your investing where you should always invest into flexi cap fund. It should be your core, okay? And multi-asset is very important, especially for you all HNIs, because you should always be disciplined in asset allocation. You know, nobody knew 2 years back whether gold will be like this or the silver will be like this, okay? So what happened, we should never be distracted from asset allocation. So multi-asset is wonderful product, but don't chase return. Like you have made killing return in last 2 years in silver and gold. It cannot be like repeating every year. So be very disciplined, but multi-asset, especially in a scenario where world is going through turmoil because of the policies of USA, because tariff which we never heard in our life, in this kind of thing, and blocking Russia from accessing the global banking system, right? So these are the uncertainties which we are seeing in our life. So kindly stick to a multi-asset, but don't expect the return, which you made. It cannot be repeated.
Thank you. Uttam, a quick last one to you. That what is your view? What is your view on today? There are a lot of exotics, leveraged. A lot of clients are actually calling me, my own friends, that mutual fund has again been made HNI centric by the new SIFs. People are so excited about SIFs. So what has been your reaction? And then I will ask all the panelists to tell us about SIFs and what is your view, and some final words you want to share with our August audience today.
Right. So, sorry, I actually missed your question because there was some, but what?
I was asking about SIFs, that why is there so much excitement about SIFs?
Okay.
People are so excited that mutual funds are back for HNIs.
Okay.
So what is, and very few SIFs have actually come out,
Yes.
but what exactly is SIFs? Why are people excited? What is happening there?
See, there's a trend. I see that people get excited for every new thing. So, there's a trend, we like to go to new restaurants. Similarly, whenever there's anything new, we get excited. Especially in the HNI segment, we want to try everything new which comes, and we want to be the first ones to try something. I'm not saying something is bad or good, but that is what we see overall. Whenever there's a new offering, there's always more interest. But in the long run, what matters the most is the asset allocation and diversification. We should spend 80% of our time in finalizing the asset allocation and the kind of diversification we can do. Because every investment, the fact of life is, goes through cycles. There is no strategy which can always remain good. There is no strategy which will always be bad. So we have to ensure that we write the right bulls and we diversify our portfolio in such a way that our risk is minimized and returns are optimized at any point of time. Chasing high returns is always very risky, and it is something which is very difficult also. So as far as new products are concerned, we should see what that product is designed as, what is the value it can give us over a long period of time. And every product category, we can set the expectations. So we know AAA debt will give, for example, 7.5%, 8%. We know AA minus can give 9, 9.5. We know single A can give 11, 12. Similarly, we know what can large caps deliver. We know what can we expect from mid caps, small caps. But the real game is how we do the proper asset allocation out of this. Coming to SIFs, SIFs is a new category, and it uses options to deliver, I would say 8 to 12% returns kind of a thing. Most of the products have been designed that way. But it is too early to see, what exactly happens, because we don't have a past track record. It is something which has just come up in last 5-6 months. They are good products, but again, we should see what we are getting into. And it has option strategy also in place, so we should know what we are doing.
So as we move to the closure, last question, Nilesh bhai, आपका क्या view है SIFs? जैसे आपने बोला वो ड्राइवर के प्रोडक्ट से क्या वापस HNI का प्रोडक्ट बन गया है? And the kind of excitement that is there in the market, is it justified? And some final words for our audience today.
So as Uttam bhai mentioned, SIF is a product which allows fund manager to take leverage. Leverage can be taken by way of futures as well as option. And it also enables fund manager to go both long as well as short. Globally, leveraged as well as long-short products are meant for HNIs because by definition they are carrying more risk. In Indian market, getting talent to manage long-short or leverage has been a pretty difficult task. Few fund managers have been able to do it, but many fund managers have failed miserably. People who have launched SIF have got access to that talent. In our case, we are still developing our talent pool and product. Hopefully, we'll launch in next quarter. My recommendation, please look at the portfolio and the track record of the fund manager before committing capital. It's a tricky product. Only a good fund manager will be able to deliver good performance. And a bad fund manager will create a disastrous performance if he goes wrong.
And some last words for our audience.
So all of you have been very successful people. God has been kind to us Indians. We have one of the best decade of creating wealth. Our future continues to remain as bright as before. And there will be many more opportunities to make money. At the end of the day, it is the entrepreneurs of India which create incredible wealth. As fund manager in mutual fund, I have opportunity to miss many such entrepreneurs. And I just want to end the evening on this particular entrepreneur. This gentleman passed his engineering exam, joined a multinational company in India, started distributing engineering products, got bored, went to US, did his MBA, joined on Wall Street managing fixed income fund, made money, got bored, decided to pursue his childhood dream of aerospace, space tech, came to India about a decade back when space was reserved for only public sector. Fast forward today, he is launching satellites in low orbit through his company Agnikul. His is the first company which uses aviation turbine fuel to launch rockets. Every other country and every other company in that sector uses specialized fuel. We were all impressed when SpaceX caught the falling fuel tank of the rocket. In next 3 months, Agnikul will be attempting the same. Maybe he'll fail, maybe he'll succeed, but he's attempting what SpaceX did in probably 6 months after them. The vehicle which carries satellite on top of rocket, even in SpaceX rocket, gets destroyed. Here is the Indian company which converts that vehicle into satellite itself, so there is no wastage. Most rocket companies require specific launching pad. That's why we have Tumba, Cap Canary. Agnikul's launch pads are mobile, and it can be launched from nearly every possible location. Yesterday, they shared that they have successfully fired 3 rockets. It looks very simple, but it has happened for the first time in the world. This is the kind of entrepreneurs which will create wealth for their investors. While on one side we are worried about AI impacting Indian IT services, this entrepreneurs gives us confidence that there will be enough opportunities to make money. Many of you would have watched our match with South Africa in the ongoing T20 World Cup. बड़ी बुरी तरह से पिटाई हुई हमारी. But even in that, there were 2 players who delivered fantastic performance, Bumrah and Arshdeep Singh. Same is true in market. Even in the worst of the period, you have to find your Bumrah, you have to find your Arshdeep Singh. And eventually, यही team है जो जाके World Cup भी जीत के आएगी. Thank you.
Ganesh, you have a tall order to top that. So the challenge is on.
So you want me to cover the SIFs as well, or just the final words? Okay. No, so I think SIS creates an interesting, sort of new product area. Taking the airline analogy, it is like you have economy, you had business class earlier, now you also have a premium economy, right? So it can be interesting for a few people, but you must know what all are the facilities that are available in this premium economy seat that you're taking, right? What can it do, what can it not do? If you're expecting a full 360-degree lean back seat, वो नहीं मिलेगा आपको, right? So it has certain limitations, some restrictions. We have to be fully aware of that. It also comes in some cases with higher risk, right? Because taking a naked short position on a sector, on certain stocks, you have to have a level of confidence in doing that. You need to be able to diversify and manage your risk also very, very carefully. So I would say it is an area where caveat emptor, buyer beware is the motto at this point of time, because it is also a relatively unproven product so far, right? So it is probably something which we would say watch for a period of time. And once you're fully comfortable with the product, then it probably makes sense to, having known all the features around it, then you decide to go ahead and buy your seat over there. Right? Now, in terms of sort of words for the audience, I mean, you are all very, very successful. You've all done very well for yourselves. I would just say that India, there has always been a little bit of this, this thing about our interaction with wealth, right? And our feeling about wealth, that somehow it is maybe not something to be proud of. That the fakir is always the respected person, right? But हमारे संस्कार में ये भी लिखा हुआ है कि धर्मस्य मूलम अर्थ, which means dharma starts only when you have wealth. So wealth creation is actually a moral imperative for all of us. And you can only do charity, you can only do good work when you actually have the wealth to be able to do it. So I would say make sure that we are doing the right things. Make sure that your wealth is also finding good uses for the benefit of society, for people who are maybe less fortunate than us. And we must make sure that we have our own, our pot must be full before we can start giving to others, right? So I think this is just a broader piece of, I would say, thought that I would like to leave with the audience.
Super. Thank you. So Gopal bhai, aapka some final words.
So Nilesh sir has really summarized it well. So I would only say that from a market perspective as a fund manager, India's story is really looking quite reasonable, but we have to tone down our return expectation from future. Because at the end of the day, the market return and nominal GDP growth rate goes hand in hand. So we had a very fantastic 13-14% nominal GDP growth rate for last 40 years, and we have made wealth in line with that. We have compounded our wealth by that percentage. But as the economy is maturing, our nominal GDP growth rate will be around 9 to 10% over the next decade or so. So we should have the return in that line. So there will be phase of very high return, there will be phase of moderate return, but kindly stick to the asset allocation and have faith into the market, because there are a lot of great companies in India. And and also keep in mind, we are going into a world where growth is slowing down, inflation is moderating. So the lower return expectation, which I am saying, it is in line with what the falling interest rate scenario across our globe is emerging with the improvement of technology. So this is my final word for you. Thank you.
Thank you, very nice. So Uttama, final, the word from words on one topic, which is like a very, at least I see my clients, they're very excited. We have launched a retirement product. So what that retirement plan does is that you can play around with systematic withdrawal plan. कि क्या return आएगी, तो क्या आप withdraw कर सकते हो, how much the money will last, how much. And I see it like it's become like a game for people. My own friends, my own clients are calling me every day, Sanjeev, I figured this out. How do I make this happen? So what is the, let's talk about SWP, systematic withdrawal plans, which is becoming very big, especially in HNI. Just can you explain that? What is happening? Why the excitement? And how does the typical retirement plan that you have created and which has gamified life for the retirees and the pre-retirees, how does that work?
Yes, so systematic withdrawal plan is just the opposite of systematic investment plan. So we know that we can withdraw a certain amount every month at a predefined frequency. So the best part of SWP is that it is the most tax efficient way of withdrawing your own money. It is better than a dividend option. It is better than a growth option. It is better than paying long-term capital gain tax. Because when you withdraw through SWP, you withdraw, rather than you withdrawing a capital appreciation, you withdraw part of your units also. So it's a most tax efficient way of withdrawing your money. And you would end up paying probably 3 to 4% on your gains. So that is the design of that product. So for retirees especially, what we have seen earlier, they used to take dividend income. Earlier they used to depend on interest income, which is highly taxable. Then the dividend income became highly taxable. Then the capital appreciation, when you take through redeeming your units, again you end up paying more. So through the SWP option, the post-tax returns have become even better for retirees. So this is a great way. Whenever we want to withdraw any money, I would say SWP is the best way. And as far as the software is concerned, we have again a proprietary software on retirement planning where one can see, how much he would require post-retirement, how much his cash flows will last in his lifetime, because the life expectancy has gone up now and people plan for 30, 40 years post their retirement now. So it's a beautiful way of seeing how your money would last, and hopefully it lasts more than we last on this earth. So that's how it is designed. Thank you.
So guys, thank you for being here. I'll close. We have got such a learned session. I don't truly feel that we have done justice to our discussion because, with each and every speaker, I think I can talk for 2 hours and we'll actually learn a lot and we'll make a lot of money. But the world is changing. What I am excited about, my final conversation from US, I am really bullish about India for the next 10 years. Today, India's largest export, I was reading, I don't know whether it's true or not, I'm just reading the paper, 22,000 crores of Apple phones exported from India. I think it's an amazing news. The kind of entrepreneurship. So as per the Harvard, their analysis, India is the second most highest countries with startup culture. But the best thing, what they told me, that it is the easiest country to do a startup. Much easier than even US. So point is that there is an entrepreneurship culture, there is energy, and as Nilesh Bhai shared the story of Agni Kund, I am also invested in a company which is trying to make green fuel for rockets. you know, it's very exciting. It's a very exciting time. Very good companies are going to come. Companies are going to keep growing, and governments are going to keep printing money. So I think there's a lot of wealth to be created, and thank you for that. So Uttam, handing it back to your team.
Thank you so much, Sanjeev ji, and thank you all once again. So, yeah, Devanshi would say the last words.
Yep. Thank you so much, Sanjeev sir, and thank you to our panelists for a discussion that was honest, grounded, and deeply relevant. This is the spirit of Fintastic Talks La Premiere, an evening, a platform that remains open beyond tonight for thoughtful exchange and meaningful connection. As you will leave, you will find a small personalized keepsake waiting for you, thoughtfully inscribed and meant to grow with you over time.